Bismillah ar-Rahman ar-Rahim. Last meeting we talked about the firms and financial markets, okay? And we focus on the financial intermediaries and what securities are traded in the financial market. And I ask you to try to go to Google or Yahoo Finance or MSN Finance to see how the prices in these websites. If you look at this, for instance, this is IBM. Look at the IBM, how the IBM is quoted in the markets. You will see like this. This is the abbreviation of IBM. So IBM stands for International Business Machines Corporations. New York Stock Exchange is the market where the IBM is traded. Okay. If you look at your left-hand side, this is the price quoted in the New York Stock Exchange, which is $186.92. Below the price is the change. If you see, this is in the red color. If it is in the green, it means the price is go up. If it is in red color, it is the price. So the close price, this is the close price in September 27. This price is quoted in 27 of September because today is 30 and and still the market is not open because this is in the United States. Okay, so it will open at 4. Let's just to give you some details about when the financial markets are opening. Let's ask you a very little question. From where the sun rise? From where the sun rise? From the east? From where from the east? China, Japan? Yes, from China and Japan. So the market started from China and Japan. This is the East Asia, from 8 to 4. In our local time, it is 12. So it is 12 in our local time at midnight. So the sun rise in Japan and in China. So in the midnight 12, it is morning in Japan. So starting Japan, China, Malaysia, Indonesia, and the countries in Asia. Then the sun is moving, okay, and coming to the Middle East. Yeah. Middle East and Europe starting in the same line. It's starting from 8, so from 8 to 4 in the morning. From the 4 till 8. From 8 to 8 to 4, yes. Okay. In our local time, it is from 12 midnight to 8 in the morning. This is in our local time. So from the 4 till 12, starting the Middle East. The Middle East بيبدأ. Okay. Then from فاهمين الكلام هذا؟ خلينا نبدأ بطريقة الشمس. هلقيت احنا هاي الشمس. Okay. This is the sun. بتبدأ من وين؟ Japan with China. It's open. بعدين مين كمان بيبدأ بعد ما يسكروا؟ الميدل إيست. Middle East open. When Middle East and Europe. Okay? After Europe and Middle East, starting the United States. USA. Now, the Middle East is open. It's open from 8 to 4. From 8 to 4. 8 in the morning. So this is AM and this is PM. After 4, the United States starting. يعني 4 العصر بتكون عندنا احنا 4 العصر بتكون 8 صباح عند مين؟ عند امريكا. يعني امريكا اليوم فاتحه ولا مسكره؟ هلقيت مسكره. ليش؟ لانه احنا فاتحين هالجيت. الميدل ايست فاتح زائد اوروبا، يعني اوروبا بتفتح كمان ساعتين. يعني احنا كم الساعه الان؟ الساعه 9. اوروبا الساعه 7 حسب المكان. يعني اليو كي او جرينتش 7 صباحا. بدهم كمان ساعتين بيفتحوا، كمان ساعه او ساعتين بيفتح سوق لندن. احنا اسواقنا الان فاتحه، كمان ساعه ساعتين بتفتح سوق لندن. اوكي، بعد ما تخلص سوق لندن تفتح وتسكر، تبدا سوق مين؟ اليونايتد ستيتس. فناو is close. This is why it is here close. Okay? Okay, look at the range. The range is the price fluctuated between 186 till 188. So this is the minimum price and this is the maximum price. Okay. 52 week. 52 week, the range of 52 week. Why 52 week? Because the year is 52 weeks. 181 to 215. So the price now is close to the top or close to the bottom? To the bottom. Is you recommend to buy or to sell? Just very simple. To buy. Be close to the bottom. Is the expectation is to go up. When it is close to the top, expectation is to go down. Is in the opposite. Okay? Open in the 27th. It was open at 188. Then it went down. Volume average. What it means? Volume average. The number of shares traded is 3.91 million. Okay? Volume traded. The number of shares traded in this market is 3.91 million. The average of traded is 3.35 million. Market capitalization is 204, this is related to the market value, $billion. 204 مليار دولار قيمة هذه الشركة. 204 مليون مليار دولار. يعني تقريبا هذه الشركة بدون ذكر اسم دولة عربية من أقوى الدول العربية، تقريبا 10 أضعاف هذه الدولة.
أكيد من دول الخليج.
لا, don't say this. Okay? So this is 10 times of a particular country in our region. شوفوا لوين؟ شركة IBM. فضوء ask about other companies. $204 billion. BE ratio, the price earning per share. This is BE ratio, which is the price divided by EBS. We will talk about EBS. Price divided by earning per share. Okay, this is, so you divide this price by EBS. That's it. Okay, dividends yield, which is DBS. So we have EBS and we have DBS. They call this dividend yield. So dividend yield, as in here, which is 0.95, 0.95, it is equal the payout, which is the dividends, divided by number of shares outstanding. This is the dividends. EBS, we know about EBS, earning per share. Shares, number of shares outstanding, it is 1.10 billion. يعني 1.10 مليار سهم عندهم الجماعة. اوكي. and قديش تريد معمول على 3.195، يعني تقريبا ثلث الشركة تقريبا. بيتا, you know what is beta? Beta 0.69. Beta is 0.69. What is beta? Yes.
The relation between the investment returns and market returns.
Yes, you are right. And what is for this? Okay, you are right. Beta. So the relationship between the company return, corporation return, and the market return, which is fine. and this is measured for the systematic risk. Okay? It measures the risk of the business. If this figure is big, it means the market's holding higher risk. If this figure is small, it means the market is the corporation is holding lower risk. Okay. Institutions. This is important. Institutions ownership. What means? What it means? Institution or institutional ownership. Yes. Yeah. نسبة الأونرز. أوكي مين هم الأونرز؟ No. مين هم؟ Institutions ownership. أوكي بس مين؟ اسمها institutional ownership. اسمها institutional ownership. Very simple.
Organization.
40% are shareholders and 60% of the
علي صوتك. طفى الجهاز؟ اوكي بنشغله عندنا. Institutional ownership.
40% of the shareholders and 60% of the builder of the organization itself.
طب هذه من وين حمزة عندنا؟ Institutional ownership. Institutional ownership نسبة مساهمة the percentage of owners of the institutions in this business. نسبة مساهمة الانستتيوشنز المؤسسات في هذه الشركة أو نسبة استثمار المؤسسات في هذه الشركة. فقديش نسبتهم؟ 60%. You know 60% من الشركة هذه تمتلكها مؤسسات. يعني مش individuals. This is important. Sometimes you have like family ownership. The percentage of families investing in this company. نسبة مساهمة الفاميليز العائلات في هذه الشركة. Okay? You just take the very little. This is the risk. Dow Jones is the index of New York Stock Exchange. S&P 500 technology. This company is technology company. Okay, and this is the abbreviation or the acronym of this company. This is the charts, how it's fluctuated. Okay, of the if you click on the 1 day, you see the fluctuation of 1 day, 2 days, 1 month, 3 months, yield today, and 1 year, 5 year, 10 year. You can see the chart for up to 10 years. So this is important. In your right hand side, you see a news about this company. Okay? Particular news, which is daily news, hot news about this company. And if you look down, these companies are the companies compete IBM. You see Oracle Corporation, one of the Cisco. You know Cisco. Cisco, one of the largest company producing hardwares. So in just very little screen, you have big information about this very little. And you see the fluctuation. We did this in Excel.
Yes.
We did like these things, how price fluctuated. Then description of IBM, background of IBM, and this is important as well. Officers and directors, who are the main directors of this company. And you have Virginia, Romiti, Mark, and other people. You just know about people who manage IBM. It's important. Okay, so let's move on to the chapter 3. Okay, so try, when you go home, just try to perceive this screen. This is very little screen. You can easily digest the information. And okay, let's move on to chapter 3 now. Okay, and now let's start the understanding of financial statement. financial statements, the business have to provide financial statements. These financial statements include the balance sheets, income statement, cash flow statement, and shareholder equity statement. So 4 financial statements. Let's throw this a question. Is it important to know about these statements? Is it important? Yes. Why? Raise your voice, please.
First, to evaluate the current performance.
Evaluates. Okay. Let's see. Right, what you're saying. Evaluate. Evaluate or assess is like assessments. Okay.
Forecast the future.
Forecast. Okay, we see forecast. Sorry? Monitoring. Okay. Okay, you're right. So the importance of the financial statements, it provides assessment for managers, monitoring, and forecasting for the future. Okay. Look at here, understanding financial statement, taxes. Financial statement is important. Is the link between financial statement and taxes? Yes. Why yes? Why no? Taxes. Is a link between financial statement and taxes? Yes. Why yes?
Tax considered as expense.
As expenses?
In the financial statement, we have most important the principal cost benefit analysis
Yes.
to know if we get benefit exceed the cost we pay.
So at the end, in the income statement, we have to pay tax.
But now,
And the tax decision, I mean the tax rate, influence on our income.
and our
Yes,
income involved.
because our income deducted by the tax. So it has direct impact on our income, okay, which is important. Cash flow. What is the difference between cash flow and the income statement? Yes.
Provides the profits and the incomes of the organization, but in cash flow provides the assets and liabilities.
The cash flow.
What
No.
the company owns and what the company
This is not the cash flow.
Balance sheet.
The balance sheet. Yes.
Cash flow provide us with the cash received and the cash spent over
The
a
spent
period
of. Okay.
period of time.
Okay, let's move on. The main objectives of this chapter. The first thing, an overview of the firm's financial statements. Just revise, because you already acknowledge in accounting about these statements. So I'm not going in-depth analysis or in-depth explanation of these statements. Okay, I will focus on a particular issues which been ignored in accounting. Okay, be careful. I'm here not just to go to explain what is financial statement, rather is to explain the things related to the functionality of these statements. The income statement as well, we will focus the main components of income statements, which includes the revenues, gross profits,
Expenses and net income.
gross profit, operating income, and pre-tax revenue, net income. So this is the revenues. Expenses, if you look at the expenses, so this is revenues. The cost of sales,
Selling.
I was use different line or different markers. The one in red, the cost of goods sold. Okay, and here is the operating expenses. Here is the interest. Here is taxes. So in the blue one are revenues, and the red one is expenses. So it's like revenues minus expenses. So it's here revenues minus expenses. Okay, so the again, evaluate firm's profitability. This one. Okay, number 3, the corporate taxes. We will know about the different tax rates and how it influences on the business activities. Then we will talk about the balance sheets. The balance sheets includes main accounts, assets and liabilities. In the assets, we have current assets.
Current liabilities.
No, and the assets. We have current assets and we have fixed assets. Liabilities, we have current liabilities. We have current liabilities. And we have long-term liabilities. And we have equity as well. Okay? So these are the components of the balance sheets. The cash flow statement, number 5. The cash flow statement, okay? The cash flow statement includes 3 main accounts.
Flow and flow.
3 main accounts. 3. Not. Yes, cash from operational activity. Cash from financial activities. And cash from investment activity. Okay, so these are the 3 main accounts in cash flow statements. Okay, so we will focus on all of the components of the cash flow statement. Okay, the learning objective of this chapter is describe the content of the 4 basic financial statements, the components, the main contents. Discuss the importance of financial statement analysis to financial manager. And we will talk about the financial analysis and how financial managers are interested in doing financial analysis. Number 2, evaluate the profitability using income statements. We'll see the profitability rate. Okay, revenues minus expenses. Okay. Number 3, estimate the firm's tax liability to see what is the tax rate or the tax the business should pay using the corporate tax schedule and distinguish between the average and marginal tax rates. We will see this. And the introduction use the balance sheet to describe a firm's investment in assets and the way it has financed them. As we said, in the assets, in the balance sheets, in the first meeting I explained this is the asset and this is the liabilities. Fine?
Yeah.
This is investment opportunity is here and how we finance this investment opportunity. So investment opportunities are financed from the liabilities. So the second point, and define the sources and uses of funds. Again, this is a source of funds. This is a source
Capital structure.
of funds, yes. And this is the use of funds.
Budgeting.
It's like budgeting, this in here. And by using the cash flow statements. The principles used in this chapter, we have 3 principles. We will use them in this chapter. Principle 1, money has a value, has a time value, and I explained this in the first meeting. We need to recognize that financial statement do not adjust for time value of money. Financial statement provide you with a static point of view, static. Okay, it doesn't give you the future, for instance. You can use them to expect the future, but it is not the future. And cash flows are the source of value, not the profits. Be careful.
Yes.
Okay, so the investors are looking at the cash flow, okay, and consider more important of the cash flow. Financial statements provide an important starting point in determining the terms of cash flow, combining the income statement with the balance sheet, creating, or we can generate the cash flow statement. And this cash flow statement is important for investors. We should be able to distinguish between reported earnings, the net income, and the cash flow, which there is a big difference between the reported earnings and the cash flow. It is possible for a firm to report positive earnings but have no cash. And I explained this before when we talk about the real cash flow and the profits. Okay? Principle 4, market prices reflect information. It means this statement should reflect itself in the market price. Firms' financial statements provide important information that is used by investors in forming expectations about firms' future prospects and subsequently the market prices. Okay, an overview of the firm's financial statement. Let's take an overview of the financial statements. As I said, we have 4 financial statements: income statement, balance sheet, cash flow statement, and statement of shareholder equity. For the income statement is the result of the business. An income statement provides the following information for a specific period: revenues, expenses, and profits. Okay, revenues, expenses, and profits. Revenues minus expenses, it generates the profits. The balance sheet is looking at the asset, liabilities, and shareholder equity, and I explained this. The cash flow statement, it explains the operational cash, the financial cash, and the investment cash. The statement of shareholder looking at the common stock account, preferred stock account, retained earnings, and changes in the ownership. You know, when I talk about the IBM, we look at that IBM is owned by 60%. 60% of the shares is owned by institutions. If we look at the changes of the ownership, it's important for the investors. Sometimes we have information about the family ownership. So it's important for the investors. If we see a particular company investing in a particular area, it means this area is good for investment. So this is why the ownership equity, the changes in the ownership, give some information about the business. What focus on this chapter discussed the content and format of the income statement, balance sheet, and cash flow statement. Okay, so we will talk about all of these things. Why we're studying financial statements? As we mentioned before, for assessment, for monitoring, and for forecasting. Financial statement analysis allows us to assess the present financial condition of a firm. Okay, so chapter 4 introduces the tools and techniques. To next chapter, we will talk about the tools and techniques of the financial control. Financial statements are used by both insiders. Insiders, it means managers, employees, board of directors, and outsiders, the stakeholders. Outsider, the external stakeholders, suppliers, banks, creditors, and so on. For planning, financial planning models are typically built using the financial statements. Financial planning is covered in Chapter 17. What are the accounting principles used to prepare the financial statements? I think you have good knowledge in accounting, particularly this is accounting, the principles of accounting. So I will jump in over these things. The revenue recognition principle. Okay, you know about this principle? Yes. The matching principle. Yes. The historical cost principle. Okay. So, and these are the definitions of these principles. The income statement. The income statement, as I explained, the income statement is going like this, just very simple. Starting by sales. Okay? sometimes they call this is revenues. You deduct from sales the cost of sales. So you end up with gross profit. You deducted from gross profit the operating tax, operating expenses. So you end with operating income. This operating income known as EBIT, earning before interest and tax. You deduct interest, so you have EBT, earning before tax.
بيطلع لنا يعني يساوي.
Or it is a pre-tax. Then you deduct tax, you end with net income. That's it. This is the story of the income statement. Very simple. Is it?
Yes.
Starting by sales, ending by net income. The net income influence on the shareholders' equity. This net income influence on the net income equity, because when we look at the net income, we think how we manage the income. For instance, to pay them out, it means to distribute to the investors, or to keep them for investments. So if we pay them out, it means paying dividends. So we have dividends. And you see when we talk about the IBM, they have dividends yield. Okay. Net income influence on the EBS. EBS is the earning per share. And I write the formula of the EBS, the net income divided by the number of shares outstanding. Okay, so you see why the importance of net income. This net income is important for the cash flow then. If this net income present or the portion of cash is high, so it's fine for the business. Or this is good for the business. So income statement is also called profit and loss account. It measures based on 1 year or quarters, maybe semi-annual. As we said, revenues minus expenses. Income statement will contain the following: revenues, expenses, then the profits. And this is the components of the income statement, like what we said here. And this is example of the income statement. If you look at here, sales you have 2,700, and the cost of goods sold is 2,000. Gross profit, you deduct this from this, you get the 675. Then operating expenses, net operating income, which is EBIT, like in here. Interest expenses, then earning before tax. You deduct income tax, you end with the income, it's 204. Look at here now. After the income, you think on what you are going to do in the income, net income. Not, okay, so dividends paid to the stockholders during 2010 is 45. 45 for each stock or per share. You paid 45. Okay, don't need this. 45 $45. So what is the dividends per share? This one. So it's 45 divided by the number of shares outstanding. Okay, so 45 divided by number of shares outstanding, we have 90 million shares So we have $0.50 for each share. $0.50 the dividends for each share. How we get this? The company decided to pay out $45 million. Fine. The number of shares is 90 million shares. So the dividends per share is 45 divided by 90. It is 0.50. Now, the EPS, the earning per share, which is this one, the EPS
2.28.
is the net income divided by the number of shares outstanding. So the net income is 204.75. 204.75 divided by 90. So it is 2.28. 2.28. It means each share generate 2.28 as net income. Okay? Any question about this income statement? No? Okay. Let's look back to the statement. Let's look back to the statement. Now, after generating this statement and know about the main accounts of this statement, let's look back. If you look at net operating income, so the most income is coming from the traditional activities of the business. If this figure fails to generate a particular amount of a profit, it means the company may have problems. It means the main income should come from the operational activities or from the traditional activities of the business. Okay? For instance, if you talk about universities, the main income is coming from the tuition fees of the students. If you talk about the Coca-Cola, for instance, the main income is coming from selling the Coke. If you talk about the Mitsubishi Motor, for instance, company, the main income is coming from selling the cars and other income related to the operational activities. If this not happen, it means the company have problems and having difficulties. Okay, look at the second, the interest expenses. This one. The interest expenses, the cost of taking debts. What cost us? Taking debts or taking loans. This is the interest. So how it costs us, what is the cost of financing our activities? So this is, if this high, it means the company may challenge issues or problems in paying back the interest and the installments as well. Fine. The income tax, which this one here, the income tax cost of corporate income taxes. This is the cost of taxes. Because this is going to the governments and funding the government's activities. And you look at the income, the last one, this 204, net income, income resulting from operating and financing activities. So this income is coming from two main areas, from the income coming from the operational activities and from financing. From financing, sometimes companies invest in other companies, or companies invest in the, let's say, from their deposit. They deposit money in the banks. So in this case, it may generate profits or income. Okay, I explained the EPS. This is example again. Firms reported a net income $90 million, has 35 million shares. What will be the EPS is very simple.
Net income and loans.
Yes. Okay. Now we talk about the dividends. Let's stop here, and in next meeting we will talk about this point and the balance sheets and cash flow statements. Okay? Any question before leaving? Okay, thank you very much.